Listen closely, because what you're about to hear could reshape the entire 2025 to 2026 market outlook. Gold analysts are now forecasting another explosive rally, and the reasons behind it are far more serious than most investors realize. We're talking central banks, geopolitical fractures, the Fed's next moves, all converging into one of the most powerful macro setups of the decade. If you think the gold rally is over, think again. Stay with me, because this story has massive implications for currencies, crypto, and global markets.
Are you still bullish gold here?
Yes, we look for nearly 20% of additional price upside by the end of 26, with our forecast at $4,900 per troy ounce by the end of 26. Not as fast as this year. We're up almost 60% year to date. But the two drivers of the 25 rally, we think will be repeated in 26. Number one, structurally higher central bank purchases. Since the freezing of Russia's central bank reserves in 2022, EM reserve managers got this big wake-up call that they need to diversify into gold, which is the only truly safe asset once you hold it in your domestic vaults. And second, Fed cuts. Fed cuts, because gold is a non-yielding asset, tend to attract inflows into the gold ETF market. And with our economists' forecast that you see 75 basis points more of Fed cuts, we get support both from central bank buying and from private investors.
It wasn't that long ago that people were talking about the great debasement trade that was going through, that investors were reallocating away from the USD into other safe havens. A lot of that money found its way to gold. The dollar has been supported in the last month. It's actually regaining ground again. How does that impact that thesis, that part of the market?
So I would think of a potential broadening in this diversification theme, which currently is quite restricted to central banks. But if that were to broaden to private sector investors, it would cause further upside to already bullish gold price forecast. I think the key intuition for the size of this price upside from private sector diversification is that the gold market is relatively small. If you look at global gold ETFs, they are about 70 times smaller than the value of the US Treasury market. So you only need a relatively small diversification step out of, for instance, global bond markets to cause significant upside to the gold price. So it's another reason why gold is our favorite long commodity recommendation. You have significant upside in the base case. And in scenarios where markets may perform less well, perhaps concerns about the fiscal trajectory or questions about Fed independence, I think gold would do even better than in the already attractive base case.
What you just heard is more than a simple price forecast. It's a warning shot about the global financial system. The real takeaway here isn't just a bullish gold target, it's the underlying shift. Countries no longer trust the dollar the way they once did. Ever since Russia's reserves were frozen, central banks have been quietly preparing for a world where the US dollar is no longer untouchable. And that's where this gets interesting. A small rotation out of massive bond markets into gold can send prices skyrocketing because the gold market is tiny by comparison. Add in the expectation of further Fed cuts, which always weaken yield-based assets, and suddenly gold becomes the perfect hedge for both governments and private investors. For us as market watchers, this is a key signal. Capital is searching for safety outside traditional systems. That affects equities, crypto flows, and even how nations structure their reserves. This is TheCryptagon. Stay sharp, stay informed.